we've got the market, I think, which is, all over the place. 12 points now on the index. We're at, 17,615. And it's more flattish, right? I mean, let's look at the Bank Nifty. Maybe the Bank Nifty is now back in the red.
Under pressure.
It's basically been a big round trip, right? I mean, a big cut, a big bounce, and then most of those gains being given back. And the Nifty Bank is up on your screen. It's still it's still up from the opening levels, but this is still, it's still playing out. And by the way, we're still in the first 30, 35, 40 minutes of the market opening. I guess there are many more of these moves coming through the course of the day, as I was saying earlier. This is just the first act of what perhaps is a long play on this one. We'll stay with more earnings, and speak with the management of Go Fashions. They reported numbers as well. Revenue growth has come in at 24%, and gross margins are also steady at about 60%. In terms of store expansion, they added 35 new exclusive brand outlets in the third quarter, which takes the total count to 604. Markets are more excited about the aggressive store expansion that they're coming up with. Gautam Saraogi is Executive Director and CEO of Go Fashions India, is joining us to take some questions. Gautam, good to have you with us here. Good morning. Prashant this side. If I stretch the third quarter a little, I go back a little bit, take the 9-month full number, gross margins for the business are now tracking some 59%. They're down about 170, 200 basis points compared to 9 months the previous year. This is despite the higher share of EBOs in the sales mix, which is about 77%. Could you explain what's happening on the margin front?
Yeah, sure. So see, in quarter 3 last year, we had reported 61.5% of gross margins, and we had seen an inflation in the raw material pricing in December 2021, and we had also parallelly increased our selling price when the raw material prices had gone up. Post which we had guided a 60% gross margin on an annualized basis. So keeping the 60% gross margin in mind, we are currently between 59 and 60% currently. So it's more or less close to what we had guided. And this will also continue on an annualized basis.
Okay. Your same-store sales growth was 10%. That was largely led by value growth. So in terms of volumes, you actually saw a decline this time around. Can you tell us what is the prognosis in terms of same-store sales growth? Are you seeing any kind of pressure there? Will it be in low single digits for FY24 as well?
See, we are actually opening many stores in the same micro area. In the small micro area, we're opening n number of stores, which sometimes leads to cannibalization of our existing stores. So for us, the right metric to track in our business is same cluster sales growth. So the same cluster sales growth has been very encouraging this quarter. We've seen a 24% same cluster sales growth and 11% volume growth. But having said that, as management, we still want our SSG levels to be positive. So in the coming quarters, we are going to target a 4 to 5% volume growth and at a same store sales growth level as well.
Okay. All right. Hi, Gautam. Good morning. Gautam, post the festive season or from mid-November, various checks suggest that there's been a slowdown. Have you experienced that, or are you seeing business as good as it was earlier? Give us your brief understanding. And also online sales, I think it's only around 2.5% for you, but it's growing at a rapid pace. Where do you see this number headed? Go ahead.
So very rightly you asked, see, this quarter has been a decent quarter for us. I wouldn't say it's been a great quarter. It's been a good quarter. As management, we expected our revenues this quarter to be around 184 to 185 crores. We've delivered about 177 crores of revenue. So we are about 7 crores short of what we would have ideally wanted to be. So it's been a good quarter for us. In the festive quarter, October did very well during festive. Then we saw a sharp fall in November, and then December revived back again very well. So I would overall say it's been a good quarter. As far as what was your second question?
Your online sales. Online sales was a small part of your business. It's only around 2.5%, but it's growing at a rapid pace. I think 20% odd. Where is that number headed?
Yeah, so online is doing very well for us. We have taken a lot of initiatives at an omni-channel level and improved our own website selling as well. So currently what is at 2.5%, our target is to reach around 5%, and then maybe in the next 3 to 4 years get to around 8 to 9% of the business.
Okay, 8 to 9% of the business from 2.5% currently. Would that mean spending a lot on advertising, marketing? Because even the online space has become quite cluttered now. Ad spends as a percentage of sales, how much do you think it could go up?
So our ad spends will continue to be between 3 to 4%. See, currently our ad spend is about 3.5%. So we don't really see a spike in our ad spends. The online sales will organically grow with the offline, which is obviously going to be a slow way of building that business, but that is the right way according to what our business asks for. So we will not see an increase in ad spends, but slowly that percentage of 2.5% will eventually go to 8% because of our strong offline presence.
Okay, just one quick point, actually two, Gautam. What would the average selling price for you be? It's about 730, 740 rupees right now. Where do you see, how do you see that? I mean, as a strategy also, responding to market conditions in terms of input prices is one thing, but how do you see this panning out from a strategy point of view in the coming quarters and yeah?
See, we as a company want to price most of our products less than 1,000 rupees. So today, more than 80% of our products are priced less than 1,000. So we see this average selling price going and being eventually settling down between 900 and 1,000. Now, how is that going to happen is based on our new product portfolio. The newer products which are coming out are a slightly higher selling price. So our ASP, which is say at 730, 740 rupees right now, will eventually over the next 2-3 years go and settle down between 900 and 1,000. As a strategy, we don't take price hikes for our existing products unless there are long-term increase in raw material pricing. So for us, growth is going to be driven by volume and value is going to be driven by new product introduction with a slightly higher selling price. So we eventually see the selling average ASP settling down between 900 and 1,000.
That between 900 and 1,000. Got that. Thanks a lot for joining us, Gautam. Have a great year ahead. That's Go Fashion for you. By the way, for the market, it's really all over the place. So the market may look like it's in flat territory right now, but it's been through a massive roller coaster ride in the last 1